let's start from here. Okay, welcome to Dr. T. All right, join webinar with this IFAST team, right, together with Stanley and the team. Right, there are a lot of worries about the black swans. Right, just now Dr. T have mentioned quite a few. Right, COVID-19 is still a black swan, although probably some people do not care, want to coexist with the virus. Right, from then we actually bring out the supply chain disruption. Right, so which indirectly cause the higher inflation. And in order to tame the high inflation, which is the last 40 years high in UK and US, and even the last 10 plus years high in Singapore, right? So the central bank, the Fed, has to increase the interest rate. So which is the number 4, this so-called the black swan. Right? At the same time, the rate of increase, if this is too fast or too high, right, and global investor worry. So therefore, right, the market actually for certain exchanges start to actually slow down, so causing significant correction. So that's why some investors very worried. So they do not know what to do, buy, hold, sell, wait, right? At the end, if you do nothing, right, you may miss. This could be one of the best opportunity in the last 2 years. So that's why I integrate all the topics together, right, today to show to you how to apply defensive, undervalue, and dividend 3-in-1 strategies to fight against the black swans. Right? Not to mention the last of the non-black swan is the Russia-Ukraine war. Okay, all are interrelated, the 5 black swans. Okay, at the same time, before we proceed further here, right, today I'll break the presentation into 2 parts. Part 1 is on the market outlook, specifically focusing in this Singapore and Hong Kong market with more potentials. Yeah, you know the US has been coming down. That one we can still wait, And using 4 defensive stocks of these strategies, right, to actually fight against, right, the fear of a black swans. But before we proceed further, just a reminder that all the sharing here are for educational purpose. You'll be trained how to make decision, right, by yourself, right? But more importantly, you must know your own personalities. Are you a short-term trader or are you a long-term investor? Are you Kiasu or are you Kiasi? Okay, so all this is just a general reflection of your personality, But let's proceed from here, All right, quick introduction of Dr. T. Just now, there's some sharing already. I have over 20 years of investment experience. I'm the founder of EIN55.com, right? This investment blog. Feel free to visit it, right? Because a lot of hundreds of articles, right? And even a lot of useful and free information available to you. Okay, let's proceed today with our main topics. But before come to the meat, right? That's looking at some foundation first. You must know the foundation, right, before we can apply. So Dr. T was rule number 1. Yeah, so this is called the basic. I call it the EIN55 style. Dr. T nickname is EIN55. So therefore, I have a 55 investing styles. My belief is this way, right? Investing or trading must look for a giant. Right? A giant, not necessarily the biggest company like Apple or Microsoft, but it has to be strong internally. Right? After look for the giant, wait for the giant to fall down, implying wait for the price correction, but don't go in too early. Otherwise, you may catch the this falling knife. So you buy low, you may get lower. Right? So therefore, at a certain point, when the giant recover, then that will be a good time for you to enter. So this is part of the reason Dr. T actually want to include the Hong Kong market, although I could have included the China market as well, because there's a possibility that both country giants, right, the exchanges are actually recovering. Okay, so you have 2 choices. You can buy low, sell high, or you can buy low and hold long term. Either way is fine. It depends on your personality. And in terms of investing, you must know this a few methods. I think the most common one is probably fundamental analysis, called the FA, looking at value of company. Another major school is called technical analysis. right? TA, looking at the share price up, down, support, resistance, and trend analysis. Okay, both are good, but I call them as a 100 years old method. You need to integrate with emotional control. That's why just I ask your personality, which is important, your PA, right? Integrate all this together, all right, through the optimism. Optimism is Dr. T proprietary technique, allow you to buy low, sell high, and align to your personality. And not only for stocks, but today we are only focusing on stock. You can also apply for property, commodity, forex, even Bitcoin if you want to. But you need to align among the 4 levels. Level 1, for example, today why your stock up and down, is aligning to the sector industry. Probably, your stock is bearish, could be because it's under the technology sector. And because of NASDAQ, US is falling down, level 3. So therefore, your sectors, right, your individual tech stocks is also going down. And more importantly, how about the level 4, the whole world? So this is Dr. T, 5 of my 55 styles, LOFTP, levels 1, 2, 3, 4. The higher level, the stronger is a force. And the optimism, right, low and high, 0 to 100%, and fundamental, right, strong or weak, and technical, up or downtrend or sideways. And PA, are you a short-term, medium-term, long-term, or lifetime investors? All can make money, but you must minimum be clear about what's your LOFTP. So later on, I will actually apply this a few simple methods and apply on the case studies, specifically to fight against the 5 black swans we mentioned earlier on. Okay, this is probably the most important slide for today. This will explain what's optimism. Optimism, technically, you need to know the value first. But today is beyond the scope of this webinar to describe the details. But technically, once you know the value, EN55 value, then you can define the up and down through 0 to 100% of the prices, right? If the price is less than 25%, you can buy low. If it's within 25 to 75%, right, you can actually hold at the middle, right? If it's over 75%, right, you can actually sell high. And of course, you can actually wait for this durian to fall down and buy low again. So it is called buy, hold, sell, wait, and so on. And more importantly, this is your PA, A, B, C, D, no right or wrong, right? But just to ask the audience who is joining so far, can you type in the chat box, which percentage do you belong to, A, B, C, or D? There's no right or wrong. I just want to have a feel. Okay, feel free to type in the chat so that later on I can actually focusing more on your PA, especially when I reply to you. Okay, for example, like Jenny replying, she is more on the medium term. Richard is a more long-term lifetime, which is not wrong. So important is whichever your A, B, C, D, just now you're answering, right? For example, one of the factors you can consider is a time frame. Okay, short term versus long term. Later on, we have a chance to look at both, and then you can have a better understanding. What is the required for each of them? Yeah, so don't just follow the tips. Everyone to buy the same stock, because stock A, right, could be so-called something valuable to investor A, but it could be a poison to trader B. Yeah, so someone's best stock could be another person's so-called lousy stock. Why? Because the positioning of buy, hold, sell, wait, right? Or even some of you potentially want to do shorting, right? Short selling. All this must align to your unique PA over here. Okay, but from here, we must take note that the low or high is just one of the strategies. Okay, there are at least 3 different strategies. Buy low, sell high is just one of them. You can also buy low and hold long term, right? You can also buy and collect dividend, isn't it? So today, in fact, we can combine the 3 strategies together through the defensive stock, through the undervalued stocks, through the dividend stock, and through even your fear of the 5 black swans. You also don't know whether tomorrow, whether someone may press a button, right? Press a button, you know what I'm trying to say. There's been a gentleman keep on, all right, threatening the whole world, right? If no choice, have to press one button, right? Of course, saying that for many days, what if one day the button is pressed? Do you think the stock market will be gone? May not be, may or may not. So, but we cannot over worry. If you worry the sky will fall down, then you cannot do investing anymore. You have to do nothing, stay at home, praying, hoping. But unfortunately, hope is not the right strategy. I'm okay for you to do nothing, but that do nothing, don't care, both up, must be aligned to the current market. It's okay, and align to your own personality. Okay, moving from here, just remember, we wait for the 4 seasons. Winter time, this is what Warren Buffett said. When other people are fearful, you need to be greedy. So why? Because your upside is 75%. If you can wait until winter to go in. And at the same time, even you buy at winter, you buy low, it may still fall down. Yes, that exactly some of you worry. Dr. T, is not that I don't know now it's low, but I buy low, that later fall down lower, how? I'll regret for life. What if I buy at $1, it fall down 50 cents? I buy 50 cents, it dropped to 10 cents. If I buy 10 cents, it dropped to 0, how? Exactly. So many news, so many analysts, even provide you a lot of information. Okay, so that's why every day you search the news in Google, the more you read, the more you're scared. Why? But you must understand why analysts write something to you. And unfortunately, some may not know that. Some may not be neutral. Some may actually share something to either to make you excited or to scare you. So that's why each of you, you must make your own decision, which is the most important. Even for today, Dr. T sharing here, these are all my personal views. But at the same time, I'll share with you the pro and cons of each technique, and then how to position, whether short-term versus long-term. Then you have to make a one decision whether it makes sense or not. Is it okay, everyone? All right, so let's continue from here. If let's say there's any Q&A, just remember, wait until 9 p.m. later. I will actually answer to that one to one. Okay, we move on to here. Just remember, we no need to eat the fish from the tail to the head. No need to buy at the lowest, sell the highest, because theoretically it's possible, but practically, it's almost impossible. So therefore, it's important for you, to actually learn to buy low enough and sell high enough. This is not a true 4 seasons. This technically tell you there's a low and high of the stock market. So when the right time comes, either short term, medium term, long term, or either the lifetime opportunity, as long as aligned to your own PA over here, A, B, C, or D, you need to actually start to consider. Okay, so let's move on from here, and I'll kickstart with our part 1 of the presentation. Part 1 focusing on the market outlook, and then the part 2, is more on the case studies.
Dr. T, I have a question. When you talk about Warren Buffett, I suddenly remember that actually looking at the West, the S&P is almost down about approximately round up to 20%. The Nasdaq that I'm monitoring is also approximately down 30%. Would this mean bear market? And looking on the east side, Xi Jinping just got back from Hong Kong. Okay, and I realized that the China market is up more than 14.8% from April. Looking at the CSI 300, one of my favorite countries in Hong Kong is actually up 18.4% from the April lows. Does it mean that it's inching closer to the bull market? How do you feel about that?
Excellent sharing and even question by this Stanley. Why I say that, everyone, you monitor the market for sure. You know about US has been bearish. S&P down by 20%, Nasdaq even down by 30%. Official definition of bear market. So that's why some even planning, Dr. T, can I do bottom fishing or not? I would say could be a bit too early. Why you need to fight against a trend? But at the same time, Right, there are markets which already start to show signs of recovery. Okay, Dr. T, isn't it? I mentioned about the 3 steps: looking for a giant, giant fall down, giant recover. Right now, the US giant is falling down, but not yet recovering yet. So therefore, we put that aside. That's why today, you see, Dr. T focusing on Singapore and Hong Kong here. Yeah, because Hong Kong has been falling down in the last half a year or so. Yeah, so right now is a good chance, partly because, yes, like Stanley mentioned just now, right? The authority also noticed it. Initially, for example, remember 1.5 years ago, right? Starting with Jack Ma's Alibaba, I remember the time, starting, the correction phase from the ATM machine, Alibaba, Tencent, Meituan. In fact, ATM, the 3 stock contribute to 30%, 30 of Hang Seng. So that's why, as a result, Hong Kong has been falling down in the last 1.5 year. But there's a light at the end of the tunnel so far. Why? Because China usually want to do something different from the whole world. Whole world increase the interest rate to fight against inflation. And guess what the China is doing? China cut down on the interest rate further. They even do more stimulus plan. All right. Before that, there has been harsh towards the ATM machine. All right. ATM meaning Alibaba, Tencent, Meituan are the 3 so-called giant leaders. But right now, they start to loosening on the control. Right. Not only that, right? The other major giant we call property market, right, has been falling down in the last 1 year or so. And guess what? Right now, the rules and regulation is also softening. Why they are all doing that? Because China, right? They also are noticing it. They need to be flexible, right? They need to adjust. Sometimes it's like fly kite. Fly kite, you cannot so-called tighten, that holding the kite all the time. Sometimes you have to let the kite, loosening a bit, and then sometimes you have to pull it back. Understand? In that case, the kite or this stock market can fly higher or go higher. Yeah. So capital market is important for all the countries, including China, and not to mention Hong Kong is a gateway, right, for Western, right, investor to come into the world of so-called China. Of course, nowadays this China has been opening up. You want to buy the China stock directly is also possible. But today, due to time limitation, I'm not going to go into the China site. If you want to, you can listen to my future talk if you want to. Stanley actually will help to organize another one in future. Okay, but here today, I want to show that why Singapore and Hong Kong could be even more valuable in terms of opportunity than US. I'm not saying all the US stock cannot buy. I just say in general, it's okay. You wait for the correction phase to be over first. So I would agree, yes, bottom fishing is very attractive. Right. So at come the right time, Dr. T will definitely share with you again. But today, that's focusing on these 2. And specifically aligned to our objective. Black Swans fighter. Why need to defend against the black swan? You have 2 choices today. You can do nothing, meaning you got stocks, you can hold it. You don't have stocks, you can do nothing. Why? Because of fear. When other people are fearful, you also be fearful. So according to Warren Buffett, right, if you are one of the majority, do you think you can make big money? Probably not. But Dr. T, I'm scared. Don't laugh at me. I'm really scared. I already go in a bit. After buy low, then get lower. Then I thought very low one, Alibaba from $300 go to 250. Then when I see Charlie Munger show hands to go in, I also follow Charlie Munger. You see, Charlie Munger is a partner of Warren Buffett. And guess what? Even Charlie Munger dropped to 200, going some more. Go to 150, going some more. Go down to 100, even double down. Meaning, technically, the lower it is, double the capital until one day, Charlie Munger cannot take it. I have to sell half of the Baba and actually I get out from there. Yeah, so that's why don't overestimate your so-called risk tolerance level. Each of you are different. Don't go and become copycat. Go and copy Warren Buffett, copy this Charlie Munger. Right? For them, even they lose money, they will never lose money. Why I say that? Because they are smart investor, right? They may not need to use their hard-earned money, right? They never use their personal wealth. They are the chairman of listed company, but you are using your hard-earned money. You have to use your $1,000, $10,000, or even $1 million. So therefore, your decision making come with a lot of emotions, greed or fear. So therefore, personality must come first. Just as I mentioned about LOFTP. Okay, let me write down again one more time if you have actually forgotten. Huh? So LOFTP. Okay, let's look at today our objective. Today our actual objective is to fight against the 5 black swan. Just now I mentioned what are the potential black swan, not the bullshit, black swan. So COVID, supply chain disruption, interest rate hike, higher the inflation, and last but not least, the Russia-Ukraine war. Huh? Not one but 5 of them. Dr. T, how Jalat already, what to do, right? But you do nothing. If the price go higher, how? If do something, the price getting lower, how? Right? So what should I do? Right? So this is always a dilemma for some people. So for whoever you do not want to time the market, right? Or you want to time the market is also fine, right? So there's a few ways for you to fight against the black swan. How to do it? Right? So step number 1, right? You can use, we call it index ETF as a defender. Why is it important? Because index, for example, STI, Straight Time Index, there are 30 of them. DBS, UOB, OCBC, these 3 already contribute to 30% of STI. And then there are 66 stocks, right, among this Hang Seng. And within the 66 of them, the ATM, which is Alibaba, Tencent, Meituan, already contribute to 30%, same as our 3 major banks. Understand? But even assuming Alibaba goes bankrupt, assuming DBS go bankrupt, guess what? We still got 29 stocks. We still got the 65 stocks over here. So you will never be a game over, right? But of course, you know that probability of DBS and Alibaba to go bankrupt, to drop to 0, right, is very, very rare or very, very slim. But very slim does not mean it's 0. So therefore, index ETF, what it does is convert the index like STI index, convert the index like the Hang Seng index through exchange traded fund. For example, Singapore STI, we have 2 types. One is called ES3, which is the SPDR, STI ETF, or G3B. This is the Nikko M, STI. Either one is fine, okay? And Hong Kong side, Hang Seng, there are quite a few. 2800 and 2833 is the 2 common one. I think there's another one, if I remember correctly, is 3115, the iShares by this BlackRock. Huh? Right. So these are the common one. Right. Later on, you can actually go to this iFast platform, or can contact Stanley or the team if you're unsure which tickers to consider. Huh? But before we buy, you must understand, right, what is the worst case scenario. The worst case scenario, right, what we understand just now, this provide diversification. However, they are not all giants. Huh? It doesn't mean all the 30 are giants. Even this technique, right, do not go through Dr. T, the giant criteria, but many of them are giants, I can say that, huh? But not all, right? So until one day, if you can master Dr. T strategy to look for all giant, that'll be best, huh? Because the whole world, there are over 2,000 giant stocks, right? But assuming you don't know what are the giants, you just buy index stocks. And under worst case scenario, 1 of 30 stocks goes bankrupt. 1 of 66 stocks go bankrupt. You'll still be okay. Why? Because it's unlikely for a country to go bankrupt. I say unlikely, I'm not saying cannot. Huh? Remember 10 years ago or over 10 years ago, there's one country called Iceland. Iceland went bankrupt before during the subprime crisis, but it also reborn itself. But for a company, even like you look at Noble Group many years ago was a SCI component as well. Noble Group actually went bankrupt. Right? Can I say bankrupt or whichever reason, right? Due to the iceberg, right? But no matter what are reasons, just remember, if you buy one stock, if you do not diversify, if that one stock is gone due to any reason, even you think it's impossible to go bankrupt, then all your investment is gone. Is it clear? But if you invest in 30 so-called or 66 stocks, right, especially if you don't buy just one index, I touch wood, if Singapore go bankrupt, we still got Hong Kong. Hong Kong goes bankrupt, we still got, assuming you buy this Nasdaq or this S&P, okay? Yeah, or you buy the China, this A50. How to let all the four major economy all go bankrupt? If all of them all go bankrupt, that is not a global financial crisis anymore. Dr. T have a special term called level 5 crisis. Level 5 crisis never happened before in the human mankind history. If it happens, likely because there's one gentleman, right? Probably somebody already know, right? Press a button, right, accidentally. So at the time, the stock market no longer important. But do you think that possibility is there? Yes. But do you need to worry every day the sky would fall down? You don't have to. So that's why knowing is one thing, but you do not actually, need to actually worry about all this, right? So more importantly is right now, we got a 5 black swan, right? But this is all within our control at the moment, Okay, so not only that, assuming nothing happened, even the share price up, down, let's say 10, 20%, but you can see we got the 3 to 4% dividend yield, right? STI will protect you. Even in Hang Seng, there's a 2 to 3% dividend yield, right? Meaning, assuming you worry, you don't buy stock just because of the T, I worry the next 2 years. I go and read all the expert, everyone say, wow, the sky will fall down. I think, wow, the market will drop by another 50%. Possible, but no one have the crystal ball to see the future. They could be right, they could be wrong, but this is your hard-earned money, what to do? So therefore, you do nothing, you put your money in bank, right? DBS will be happy. Hey, let me offer to you 1% fixed deposit. Or you can give your money to Singapore government. Right now, Singapore savings bond can give you even up to 2% return. It's okay. But right now, guess what? Even you do, you don't need to predict the market. You don't need to do an analysis. You don't even need to know what are giants. You just need to know whether Singapore okay or not, Hong Kong okay or not. I analyze, say, I think Singapore looks like, quite okay leh, because I stay in Singapore, ma. I think Hong Kong is also like a golden goose. I don't believe it will go bankrupt lah. And guess what? Assuming the next 2 years, the black swan, truly become the next global financial crisis. Assuming it comes, assuming the next 2 years, right, become cold winter. And guess what? You put your money in banks or Singapore savings bond, you get 2% every year. But right now, you can put your money with STI, getting 3 to 4%, meaning they may go down by another 20% or whichever. And one day, the catch is here, right? The difference between index or the giant with any other stock is, right? Any other stock fall down may not come back. You buy low, it may get lower. You buy at the 1 cent per share, it may drop to 0. You can lose everything you have. Right? For example, some of you maybe get burned. Last time you buy even so-called your defensive stock like a high flux. You thought high flux must be defensive, related to what the water, industry, right? But if you know how to analyze, high flux 10 years ago already give you hint it's not really doing well. Yeah, 10 years ago, not until something happening. So what I'm trying to say is this way. Why we're focusing on index? Because index contribute to LOFTP, the L. This is the level 3 force. Level 1 is individual stock. Level 2 is sector. Level 3 country. Level 4 is the whole world. We are using a giant called a country to protect you. Do you think Singapore will be with you, right? For the next 5 years, 10 years? Probably no one, able to see 100 years from now. But we are talking about 10 years. Do you think Singapore, right, even got recession, will be okay, can recover again? Likely yes. So therefore, according to the LOFTP strategy, right? Buying index ETF, right? You are getting level, right, protection. But we cannot just because of that anyhow buy. So we still need to align to the OFTP, right? So that's we raise all this here. Okay, I just want to give you a confidence. Today, don't just analyze until paralyzed, right? In fact, investing as simple as invest in Singapore, as simple as invest in the so-called Hong Kong, okay or not? Okay, so let's move on from here, how to do investing. So apply Dr. T, the second strategy called the Optimism, LOFTP, the O for Optimism. Exactly how draw is beyond the scope of this webinar here. In future, got chance, I'll describe further. Right. This is the Optimism in the year 2020. Right. That time during pandemic time, you see, Optimism dropped to 24%. This is what Warren Buffett say when our people are fearful. Every 5 to 10 years, you're fearful. This is called the green line. Okay. All right. 24%. Green line is 25% Optimism. All right, this is Dr. T, right? Intrinsic value, 50%. 75% called greedy line. When other people are greedy, you need to be fearful. When other people are fearful, you need to be greedy. And finally, 100% Optimism. All right, you can buy low, sell high. You can buy low, hold long term. You can also collect the 3 to 4% dividend yield, right? Because nowadays there are more REITs joining this Singapore SCI. So last time the average is around 3% dividend. Right now even can goes up to all the way to 4%. Huh? Yeah, future likely will be even more. All depends on prices. Okay, because dividend yield is the dividend, right, over the share prices. Your entry prices will determine what's the yield you get. But don't just collect the dividend yield. Dividend yield is just a bonus. Eventually, we also want the capital gains. So let me show you there are 3 mechanisms to make money here. All right. Number 1, you can buy low, sell high. Buy low, sell high. Buy low, sell high. Buy low, don't know. Again, you see this one called forward looking. Dr. T method is forward looking. This is not the back testing. I've been teaching over the last 10 plus years. All these are forward looking. Right. From here, the up go down to here down. Right. The only question is, do you believe one day will fall down? Yeah. So that happens in year 2020. And at a time during the most fearful time, that time still don't have a so-called Omicron. That time still only got Delta variant. But there are close to around 1 million people worldwide die of COVID. So during that the most difficult time, right, do you dare to buy low? Right, that time you're still fighting, you know, scared, not scared of losing money, but scared of your so-called health or life. So during the most fearful time, when other people are fearful, do you dare to be greedy? Right. In the time of 2020, right, Dr. T already showing, right? So of course, if you know me for the first time, you'll miss it. So let's take the time machine. We jump from the slide I prepared 2 years ago, jump to today. Today is 5th of July. Okay, 1 day after US Independence Day, 4th of July. Okay, that's a jump. Okay, from 24% Optimism in September 2020 to 4th of July. I did not update today's price. Right, today is 5th of July. Right, just 1 day difference. Today SCI just dropped a little bit only, huh? So technically it's still very close to 40% Optimism. 25, 40, 50, 75, and 100. So what does it mean? Right, Optimism is a smart method. Although no one knows the future, it can use probability to tell the future. How? Because 40% Optimism technically tell you your downside is 40%, your upside is 60%. You're using $40 to exchange for $60. Of course, then you say, Dr. T, like that, I can go in now. Sure not. When you're given 24% opportunity 2 years ago, your upside is 76%. Your downside is 24%. Why? This is like a no-brainer. Why you dare not going in? Because Dr. T, because other people fearful, also be fearful. Ma? Now finally you learned one of the most important lessons in life. Be different from others. Don't become copycat. Okay, it's not wrong to follow the trend, but if you follow a trend until you become part of a trend, you cannot make the big money, right? From here to here, right, the SCI has gone up by roughly 50% already, huh? From 2,000 plus to 3,000 plus, right? But even as of today, I would agree you can still buy because upside more than downside. But this opportunity, right, frankly speaking, is actually less attractive compared to 2 years ago, right? But exactly because of that, right, the US market keep on falling down. If you like the US want to do bottom fishing, I will share with you in the future webinar, not today, huh? But today I want to share with you exactly Singapore, we have very few tech stocks. Right? Mostly are value stock. That's why US fall down by 20-30%. Singapore is still like stagnant. Stagnant meaning in the last 10 years has been around 3,000 points. Not high nor low. Okay. Yeah. So that's why it close to a fair price. 40% optimism technically is close to the intrinsic value here. Right. So it means it's fair. Fair meaning you don't lose, but you don't gains. Understand? But here you gains, but you did not know. When you buy here, you thought you lose. Yeah. So that's why this is the so-called hidden opportunity. Yeah. So in future, if you've got time to see low optimism at country level, meaning a stock, not only a stock, but at level 3, a country level, showing you a long-term low optimism. Right? Think twice before you become fearful. Dr. T saying too much is useless. Right? Unless the time can go back to the 2 years ago. Right? Otherwise, now you are just, making me feel even, feel sadder every day. But what if you ignore it? Later on, optimism become 50%, become even higher. So therefore, I can understand how you feel. You definitely want to buy one of the best. You don't want to buy the second best. Second best to you is not good. You want the best. But unfortunately, the best is not for you. The best is like for Warren Buffett, for whoever well trained. Understand? Don't force yourself, right, to buy lowest. No one can buy the lowest and sell the highest. Just buy low enough, sell high enough. That will be enough for you, right, to make this a good profits. But if you do nothing every day, analyzing every day, Google every day, attending, all kinds of webinars, but without one decision making, then your result not only could be zero, but could be making a loss, because whoever sharing with you, right, their personality may not align to you. For example, I'm talking so far is more on the long-term side, more on long-term investor. Every 5 to 10 years, these are the excellent golden opportunity. Right, the sky drop the gold bar, but when it drop down, you don't feel it. You thought that is actually something risky for you. Right, you actually try to avoid it. You try to do nothing. You try to every day pray and hoping the COVID will be away, praying for the subprime crisis to end, praying for the SARS and Gulf War to be ending. Right, pray for the Asian financial crisis to be over. But look back, isn't it? All these are just a nightmare. Nightmare meaning it's over, but it's this not a one night nightmare. Typically, a global financial crisis can last for roughly 2 years. So that's why I say, if you don't time the market, if you cannot buy here, you simply buy it here, 40% optimism. But assuming the next 2 years is a crisis, but can you collect 3 to 4% return here? Can or not? Right? 3 to 4%, you just do nothing, meaning you buy and then you do nothing. It may drop 10 to 20%, you just do nothing, right? Or you can trade, right, the index ETF, whether ES3 or the G3B. These are 2 SCI ETF, right? You can just collect passive income, and you don't need to monitor the prices. You'll get, this dividend every 6 months from the 2 ETF mentioned just now. And one day, the difference with the index is, if it's a giant index, after it dropped to low, despite you cannot buy at the lowest, you can actually, one day you'll recover. For example, the worst case like here, you buy it here, you fall down, maybe it dropped by 20 to 30%. Guess what? You can average down 1,000 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, 1,000. The difference with a giant index versus a junk stock. A junk stock buy low will get lower. Buy the lowest at 1 cent per share can drop to 0. You can lose everything you have. But a giant, you buy low, even you don't know the lowest, you'll come back. Even you don't know where's the lowest, you can average down. Even you don't know it's a giant, you can buy a index. But index, not all the index are good. Huh? I'm talking about index of country with strong economic performance. Okay, since you've been living in Singapore for many years, right? Even you're not from Singapore, you're from Malaysia, you also can buy Malaysia KLCI if you want to. Right? If you're from China, you can buy China A50, or you can from another country. It doesn't matter. You ask yourself, is your country economy still okay or not? If yes, this is a no-brainer, right? To buy here. This is a second no-brainer. Okay, not the best, but second best. But of course, you buy here, you may still need to worry, Dr. T will fall down, up, down. But Dr. T, the moment I collect 4% dividend yield, probably within 1 month, it may drop by 4%, right? Because you want to time the market, right? You're closer to the short-term trader, which is not wrong. I'll move to that in a moment. We are still talking about long-term investor, okay? If you buy low, sell high, you can get 75% return here every 10 years through the SDI. Right? This is excluding the dividend yield. Assuming you get 3 to 4% dividend, you times 10 years, extra 30 to 40% you have not included to here. So technically, your wealth could double even with SDI. In fact, SDI is one of the weaker index, right? In my opinion, SDI, although I would say it's good as a defender, right? But it's still not the best stock to buy and hold for long term. Defender not necessarily is a long-term investing. Don't get me wrong. Yeah, so there are other better stock for long-term or lifetime investing, which is beyond the scope of this today webinar. But today is I just want to remove your fear of the 5 black swans, right? Because you worry, you want to time the market, you wish to have a crystal ball to see the lowest point and then sell the highest, Dr. T. Right? In that case, I have to design a time machine. Once the time machine is ready, I'll call you lah. Okay, then I'll let you jump to the year 2023 and you take a look at the prices. Then you come back, you tell everyone, 1 year later, the price will be ABC prices. If you can do that, all right, congratulations. If not, please apply this simple LOFTP technique. Okay, let's move on from long-term investor to the short-term trader. Despite this is country at lower optimism, right? This is called undervalued stock. Right? Undervalued are 2 ways to evaluate. One is called the price to book ratio. SDI, frankly speaking, right now don't have a much discount. All right, price to book is very close to about 1, at the near to the fair price. But from optimism perspective, it's undervalued. The yellow line is intrinsic value, according to Dr. T technique. So anything less than 50% optimism, we can call it the undervalue. Is it clear? So undervalue is one form of the defensiveness. Right? Although the country through 30 SCI is another defensiveness. Right? The 3 major banks, Wilmar, Singtel, okay, and there are 4 or 5 different REITs, right, all joining the SDI. Do you think they all will go bankrupt together? Right? Even there's unexpected. What if the 5 black swan form a perfect, storm and so on? Yes, of course. Right? When something happens, you can come out with all kind of story. Right? It can make you feel better, but at the end, you still got 0 action. After a certain year later, you look back, you miss it. Analyze. At the end, you buy here. So buy high, sell low. This is called the secret to lose money. That one no need to teach one. By default, follow the herd mentality, right? Follow your gut feeling. This is very natural. This is unnatural. This is when other people are fearful. But if you want to blindly follow Warren Buffett, wow, Warren Buffett say other people be greedy, be fearful, you greedy. Then I ask you now USA, Now, can you be greedy now for USA? You cannot answer, right? Yeah, but Dr. T could answer, but not in this webinar here. I'll answer in the next webinar. Huh? Okay, let's move on from here. Dr. T, remind you, already talked for 1 hour already. Can let's move on from here. Okay, so now come to the medium-term investor. Long term is 20 plus years. Okay, you see multiple cycles. These are called economic cycles, right? Medium term, probably you buy low, sell high. For example, during pandemic, you can buy low, right? Now it's forming some form of mini top here, mini double top. So this one, some of you are worrying. I would agree. That's why medium term investor may not be the right PA or personality for Singapore market. How about short term trader, Dr. T? Short term, you could buy low, sell high a few months. Currently, it's still okay. Okay meaning not bullish, but also not bearish. It's like going sideways. Okay, yeah. So right now it's supported above 3,000 to 3,001 kind of support. Okay, yeah, 3,000 is a very strong support for STI. So although there's a neckline, double top here already broken down. Yeah, but as long as it's not going down below the 3,000 points, right? It's still okay. So technically, you want to going in at the current moment at the long-term 40% optimism is still all right. But your main strategy is applying 3 to 4% dividend yield, using 30 stock protecting you, and hopefully the three major components, the three major banks, UOB, DBS, UOB, due to the interest rate going higher, the three major banks likely will make more money. Okay, and of course, currently they are also under correction, right? Because the market will not follow fundamentally exactly. Right? There could be divergence between fundamental and technical. Is it clear? Yeah. So stock market is forward-looking. It's like 6 to 12 months from now. It's never say, wow, one economic news come out, or inflation come out, whichever, then the market must follow exactly. Not exactly like that, although it's possible. Okay, so in general, short-term trader is still not perfect for STI, but it's okay considering, slightly less than the 50% optimism here. Yeah, if you don't want to time the market, right, as long as you don't put all your money, you got 10,000, 100,000, as long as it's just a portion of your fund, it's okay to consider STI. But I'd rather you, right, today, since you know that the world is flat, why you're from Singapore must buy Singapore stock, one must buy Singapore ETF. Why not look at our neighbor? Our neighbor could be as far as Hong Kong. But before that, from LOFTP to O, let's go to the T, the technical analysis. Okay, these are the share prices. Okay, there are two ETF. You can use the E3, this ES3 or the G3B. So these are two ETF. But when you're analyzing, please use the SCI for analyzing. For example, here we can see there's a resistance around 3150 to 3200. Right. So this is an intermediate resistance. So currently the SCI price is still below that. If you want to integrate trading to investing, we can let the price to above the neckline first. You see, this is the double top, mini double top, the neckline. So that's why it's falling down below the 3002, right? It create some fear. Same thing for DBS, has been below $30, right? So the DBS $30 as if like STI 3002, and this ES3, this ETF is around 3.2. Okay, it's around like 1 to 1,000 difference. So you don't need to actually analyzing separately. The moment you think it's a good signal to enter for the STI, right, you may consider that. But today, if your strategy is more like investing or more like a dividend strategy, then there's a possibility to do a contrarian approach like here, right? Contrarian by right, starting from green line, average down 1,000, 1,000, like that would be better. But right, even your index is below the yellow line, you also can do averaging, like here 1,000, 1,000, 1,000, 1,000. Okay, this strategy I'll cover in the part 2 of the presentation. Yeah, because today even the topic is seems like I already narrowed down the scope, but still there's a lot to share with you. So I will keep it for the part 2 For whoever can wait until roughly maybe 9 o'clock, I'll share with you. Okay, now we move on to continue further. Right, understanding it's optional to integrate trading to investing. Right, because you buy low, despite it may get lower, but because the STI ETF also come with 3 to 4% dividend yield. Right, as long as you know the right strategy for average down, possible to going in even at the moment. But if you're afraid buy low get lower, right, your risk tolerance level is not so strong, then please wait for the price to go above 3,200. Okay, at least above the neckline first. Let the last so-called breakdown here to become a false alarm. Is it okay? Yeah. So until now, right, the decision making is with you. You can buy, you can do nothing, you can actually so-called wait. You know, all these are possible. I will show to you the difference between long-term investing, right, partly supported by the dividend, and the short-term trading, meaning avoiding buy low get lower, so you follow the trend. Okay, the trend currently for STI, I'll say technically is still like a sideways or mixed mode. Okay, not bullish nor bearish. Now we continue, move on to our neighbor Hong Kong. Right, Hong Kong just celebrating 25 years anniversary, returning to China. And guess what? Quietly, China has been climbing up and bringing this little brother along. Right, this little brother has been going down to low optimism for the last half a year to 1 year. Every 5 to 10 years falling down. You have missed Singapore 2 years ago, but you are currently given at the real time to you. Even today, I just missed 1 day. If you use today Hang Seng price, today Hang Seng go up a bit only lah. So technically, it's still close around 12% optimism. 0, 12, 25, 50, 75, and 100% optimism. So this is truly undervalued. This is we call the safety of margin given to you. Understand? Right? By right, you buy low, you may get lower. You buy lower, you may get even lower. So that's why some people dare not catch the falling knife. But index is a different story, right? After all, this is a country index, right? And with a country of, of course, Hong Kong is not really a country, but its power is strong as a country. And behind this defender, there's another defender. Even Hong Kong may go bankrupt. Do you think that China will let Hong Kong go bankrupt? Okay. And right now with China authority loosening on the control, and there are many China stock also listed in Hong Kong. We call it the H share. Don't forget about the ATM machine, Alibaba, Tencent, Meituan. 3 of them, all the China related business. There are only 3, but they contribute to 30% of the up and down of the 66 stocks in Hang Seng. Right? Buy low, sell high. This is the first mechanism to make money. And 12% optimism, meaning your upside is 88%. Your downside, yes, you're unlucky. You buy tomorrow, right? It can drop down further. Right? No one cannot say, you'll go up forever, right? But optimism is a probability calculator. It's like calculating your chances. But remember, chances is not like within 1 or 2 days. Stock market up, down, we call it the voting machine. Anything can happen. But stock market in the long term, we call it weighing machine. Isn't it? You buy low, no need to sell high. You can even hold a long term. You see, you buy the low here. Even you forget to sell, come to low here, isn't it? This low become higher than all this year. So how are you going to lose money? Right? Not to mention, Hang Seng also can give you roughly 2 to 3% dividend yield. So in the last 10 years, you can get 20 to 30% dividend, right? Plus buy low, sell high. This one can get 100% return, double your wealth. Saying is one thing, doing is another thing. So that's why today, no matter what I say, we have 100 attendees listen to Dr. T in real time. Of course, moving forward, 1 year later, some may say, "Oh, you're so lucky. Thank you to Stanley who invite you. How come you are so lucky to listen to Dr. T? Only 1 day price delay only. Right? Today is the 5th of July and he's using 4th of July data. He tell you he cannot see the future a few days from now. But he's using LOFTP. The L stands for level 3. Even you miss a country called Singapore, You did not miss, right? This is an important market, even bigger than Singapore, called the Hong Kong Exchange. Currently crying for 1 year. Crying, no one want to help. Crying. Already crying every 5 to 10 years. Okay, so if today you believe Hong Kong will not go bankrupt, if you're thinking, okay, I just trade now, I pretend I'm doing investing on dividend now, I pretend I'm now buying a bond now, I pretend it's called Hong Kong saving bond now, although there's no such thing as a Hong Kong savings bond now. I understand. I just like you come up with illusion. You buy here, pretending this one will drop to a global financial crisis. Maybe the next 2 years you drop further. Right? Under the worst case scenario, right? You buy, for example, what 22,000 points, then you drop to 20,000 points. 20,000 points drop to 18,000 like that. What to do? So as long as you don't use all your money, later on, half an hour later, I'll show to you how can use the special defensive strategy, right? Whether average down or average up to achieve that goal. But the truth is, do you able to see through? Is it a giant? Do you see this is a logo of Hong Kong? Even you don't know how to analyze. Even you don't know whether Hong Kong still can survive for next so-called 25 years. But guess what? Behind is China. China is the number 2 economy. Right? Do you think China will be okay? So that's why some of them are almost like facts, which you should know. But knowing is one thing, doing is another thing. A lot of people thought, wow, I must join Dr. T webinar to learn something. Wow, never heard of it. The stock never heard of it. Dr. T, I know Singapore. Dr. T, I heard about Hong Kong. And Hong Kong, even you can buy Hang Seng through this 2 ETF. One is called 2800, another one is called 2833. And even you don't know, you can ask Stanley, as simple as that. No? Buy low, sell high, double the well, but no one can guarantee. You buy here, can it be double? Exactly, no one can guarantee here. That's why no one dare to put in their hard-earned money. They're afraid of losing money. The more you're afraid of losing money, the more you lose out the big money. If everyone so abnormal like Dr. T for investing, dare to going in like here, guess what? In that case, right, this method would fail. Why this method would fail? Because this method is designed for minority, designed for abnormal investor. Right? Although you don't need to be Warren Buffett, if you follow this technique, technically it's like Warren Buffett say, other people are fearful, you become greedy. Other people greedy, you become fearful. And the best thing, you buy low, no need to sell high. You buy low, can sell at a fair price. Like here, there's a double dip. Buy low, you sell at a fair price. This is so far you back testing yourself, 100% accurate if you follow this line. Right. Now my question to you, right? You can type in the chat box. If you are given 3 years from now, right? Although you don't know what is a yellow line here means, do you think, right, the Hang Seng, if you have 3 years from now, will it be higher or lower? Right? Can you type in the chat box? 3 years, not 1 month, not 3 months. You are given 3 years. Right? No right or wrong. I let you have a guessing game. Right? See who could be right one day later. We got Andy say higher. We got Kenneth say higher. We got Kelly say higher. And the rest cannot tikam because you don't know how to tikam. Right? Then we got Tom say maybe about the same. Fine. Tom, if Mr. Tom, if about the same, don't forget, you collect 2 to 3%, even higher than your Singapore savings bond. Right? Are you okay to take action? While the 90%, but of course you say higher, unfair lah. You already conditioned by Dr. T. You already know half the secret here. If today you are like no one, you know, you are like just a normal investor from somewhere, definitely when other people are fearful, you're also fearful. Definitely you'll fall down one. Dr. T, I just Google, 100 articles, there are 80 articles, right, saying that the market will fall down even further. There are another 90 articles say that the sky, you know, definitely will become darker. Wow, inflation will be gone. The share price may drop by half. Agree. Because right, fear could be contagious. But you follow the analyst, you dare not go in, low, you dare not buy. And what if one day it rebound? You know what you do? Dr. T too high already, go up by 20%. I don't want to buy. And guess what? Low cannot buy, higher also cannot buy. When will you buy? You definitely will buy here, 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 here. If you could come to here or here, definitely you'll buy. Why? Because this is a human nature. I understand. All right. So we continue here, huh? Yeah. If everyone, right, is so certain, if everyone have the crystal ball, right, this kind of opportunity will not be left, you know, for you anymore. Exactly our 100 investor, right, they are probably 70 to 80% of them thinking the market is still bearish. It create opportunity for you. But guess what? LOFTP. So far we're covering levels, looking at country, focusing on all the optimism. And then so we can move on to the, today I don't have chance to cover the fundamental, right? But we can move on to technical in the short while. It's okay, everyone? But this only 5 of Dr. T 55 styles. Got chance in future you can learn complete 55 style from me, including the macro economy. Okay, say goodbye to the Hong Kong. Okay, I'll let you decide. Of course, 3 years later, whether up or down, I think most of you may have forgotten. You see, at the end, this is just another talk. After 3 years later, how many would treasure today? The takeaway from today's talk. Yeah, so that's why it makes a difference from whoever can digest, right, and can extract the most important, you know, sharing by Dr. T today. Meaning, black swans are fearful, right? Although no one would know whether that who and who would press a button eventually, right, causing the 5 black swan to become what level 5 crisis. But guess what? You still can take action. No one will stop you. But your action taking must always align to yourself. Huh? Now you continue further. Medium term, right? Still bearish. So that's why for Hong Kong, I would agree. Why you buy low, you get lower. You see the trend itself. This is downtrend. Even for the short-term trend, it's still down, but there's a light at the end of the tunnel. You probably cannot see through here. You don't need to buy everything low optimism. Right? In fact, for trading, right, it's okay, right, for you to even applying like a breakout strategy to buy at the higher optimism. So allow me to actually show to you the technical analysis over here. So this is a Hang Seng. You can buy Hang Seng ETF through the 2800 or the 2833. Again, if unclear, contact Stanley team. Huh? Okay, so if you draw a support resistance line, the resistance is around like 22,500. We are very close to that. And in fact, this trend is, I would say, rather good. All right, let me draw for you, then you can understand better why Dr. T say is rather good. Okay, see, fall down, go up, fall down, go up, fall down a bit, right? So you can see technically this is a very good trend. There's a higher low, higher high, and it's forming some form of we call it, this one is ascending triangle. Okay, so that's why if you don't want to buy now, I will agree. You can use all kind of analysis, but once this break 22,500, you still do nothing. Right? If one day, assuming, right, people thinking future cannot predict, assuming it can go up, right, supported by the loosening of the policy in this China, right, also helping the Hong Kong at the same time, right? So right now, do you think Hong Kong and China will sync together with US? Yeah, so that's why this is a $1 million question. But now you don't need to buy any Hong Kong stock. You're just buying entire Hong Kong, right? Called ETF, Hang Seng ETF. And even you don't know how to buy the low optimism, you're afraid of buy low, get lower. Can you average down? For example, if you buy at 22,000, it fall down, every 2,000 points fall down, can you going in? Right? Can you split, let's say, your entry to 10 different entries? 10,000 break to 10 times 1,000. Yeah, of course, easy to say. Will you do it? Yeah, so that's why many people like to hear all kinds of tips here and there. But the moment they want to take action on the stock, Dr. T, wait lah. Anything must come out with money one, must wait for another maybe 1 month later. Whichever non money one, feel free. Give me stock tips. I write down. Thank you, Dr. T. Already write down 10 pages so far. All right. So continue to write another 10 pages in the part 2. Dr. T, your part 1 have not finished yet. Oh, okay lah, coming soon. Okay, so but talking here until here, guess what? You must understand, right? Analyze, eventually you still need to have a tool to take action. Dr. T, how to take action? Can buy like that, Rene? How to buy? Right, Dr. T already got one account somewhere. Do know they already do know from where and where. Right, before you do anything, let Dr. T give you a bonus for today. This bonus, right, is actually specially provided by iFast. Okay, entire Stanley iFast team is actually trained by Dr. T. Huh? Yeah, so although I'm their teacher, right, but teacher also thank you to my students, right? Because the students platform, the iFast platform is so good. I allow you to buy Singapore, Hong Kong, China, Malaysia, US. Technically, most of the important global market you can consider. But more importantly, you can get, this today. If you can take action, right, get this free account, you can enjoy one of the lowest commission ever. Huh? So before I continue part 2 with a defensive strategy, which will last another 1 hour, allow me to pass the time to this Amy. Okay, Amy, can you kindly give the special gift to this attendees? And
Yes.
before I continue part 2, huh? And make sure you pay attention to the last 1 or 2 slides by Amy. Okay, and more importantly, I get this free bonus first before Dr. T will give you the biggest durian. All right, 1 hour later. Okay, go ahead, Amy.
Thank you, Dr. T. All right, so here is the durian that Dr. T has shared that we're going to share with you, a platform that from iFast. Okay, sorry. Can see, right?
Yes.
Right. So from here, right, what we want to share with you is that for iFast, we are all-in-one platform. We have unit trust here, and we have ETF, like what Dr. T has shared some idea on the ETF. As for bonds, right, do you know that the Singapore government bond is offering at 2% interest rate for 1 year? Do you know that our government bond is offering 2% for 1 year, backed by the Singapore government? So you can earn higher interest rate than what you are getting in the bank. On top of that, right, if you are able to lock in for a longer period, you can secure up to 3% per annum now with the Singapore government bond. Exclusively on iFast, you are able to buy those bonds that are going to mature soon, like those maturing in 5 year, 3 year, 2 years. That means they are launched 10 over years ago, that kind, or not the new 10 year, 15 year, 20 years. No, you again access to those that are previously launched 15 years ago. We are able to give you that kind of access, and you can leverage on the high interest rate. We have stocks. Dr. T has shared with us that we are a platform that offer you stocks. We have flat fee. You can use it to do for CPF, SRS. How many of you uses CPF or SRS to trade stocks? You do? Right? So if you use the CPF or SRS to trade stocks, right, this is one platform that you can consider using. And for discretionary investment that you can see here, this discretionary investment is designed for busy people by busy people. Leverage on other people's time while we do what is important to us. So we have real people behind the portfolio managing actively, made available to retail clients for the very first time. Private banking client will totally understand what is discretionary investments. However, right, the closest that is made in the market now is maybe the robo investor or follow me. That one, right, is mainly into ETF, whereas and is mostly algorithm design. This one that we have here, right, is managed by fund managers within iFast, and it's a mixture of various portfolio, right? Okay, so for insurance, do you know that you can receive 25% commission rebate? Make a guess for how long you can receive this commission rebate. You buy insurance, right? Then the agent will give you a gift, or you receive some form of rebate. How frequent do you receive that for how long? Do you want to make a guess how long iFast will be able to give you the commission rebates? 1 time? 2 times? I wonder, am I talking to myself or I have an audience with me still, right? Okay, so you enjoy up to 6 years of commission rebate that is received by iFast, 25% commission rebate back to you. Makes a difference in your life while getting back significant cashback. So iFast care for the investors. We want to enable investors around the world to invest globally and profitably. Okay, so the reliability and safety of iFast. We are licensed by MAS in the Capital Market Service, Financial Advisory License, and Custodian Service. Okay, so you are able to trade CPF as well. We are the CPF Registered Investment Administrator. CDP Deposit Agent, and the trading member of HKEX. Okay, so we are also clearing member of CDP. We have acquired the UK bank. Many of you who have used the newspaper will have known that we have acquired a UK bank, and we are also working on the Hong Kong EPF. So do you know what is the Hong Kong EPF? It's a little bit like the Singapore government CPF. We won the contract of managing the money for EPF. Okay, so currently the asset under administration is more than 19 billion. This is the size of what we are looking at now. Okay, then for iFast, right, we are licensed by MAS as shown to handle custodian services for security and safeguard the administration of client assets. Okay, what it means is that what is iFast normally, what it means to you. Okay, it means that client retain the full leadership of the asset held in iFast nominees, right? So it also means that your money is your money, right? Nominees, iFast nominee means that your money is your money. iFast money is iFast money. So in the event on unfortunate event, iFast told lah, okay, your money is still safe, right? We are a separate operational entity. In the event of any claim made against iFast, asset held by nominees will not be affected under the law in Singapore. Okay, so awards and accolades. This one is, these are the various awards that we have. We have many, many more. So we just want to name a few. Okay, so for those people who are a seasoned investor who knows how to use a stock screener, this is a sample screen of the tools of stock screeners on the iFast platform. It's free, made available to all our account holders. For those who are into analysis, you can take advantage of this free on the platform. Okay, so this is a screen of the fundamental analysis. It's a tools to analyze the fundamental of the stocks. You can see from here the valuation. You can see the cash flow and then the dividend inflow as well. Okay, so all these are available. Technical analysis is also available. The most powerful part is that it comes with unlimited indicator. I do know that some website, right, you have to pay to get access to certain indicators on the chart. This one comes with unlimited indicator and is fully customizable and available to save for future use. So all your personal preference will be here, be able to design to your own personal preference and save for future use. So is it good or not? Okay, you can think for yourself. Okay, so for this one, right, commission, bottom line, this is the bottom line. So supposedly we go to trade with company X. Usually the buy and sell is at 0.25%, minimum $25 to $40. Suppose I use 50,000 to buy and sell, each will be $125. So buy and sell 2 leg will be 250. I transact for 10 times in a year. It's not that much, 10 times in a year. So it's 2,005. Okay, today's session, right? For Singapore market, what you can see here is you get flat $8 for buy, flat $8 for sell. Then you enjoy this same amount transaction, 50,000, $8 in, $8 out. That's $16. Then trade 160. Do note that for both companies, they still need to pay for GST. They still have to pay for any SGS clearing fee. So just plainly on the processing fee itself, commission itself, you have huge saving here. 2,005 minus 160. You do the max. You know these are significant savings. Okay, so for CPF and SRS, you also enjoy flat $8. Okay, so for you, our stock investing with iFast, it has no maintenance fee, no custodian fee, no dividend handling fee, no platform fee, no annual fee, no China exchange portfolio fee. Okay, so take advantage of it. For today, sign up now. All you need to do is take a screenshot of here, take a photo, like what you see, enjoy the savings, scan, and take 1 minute to fill out this form. Our professional investment expert will contact you within 1 week. If you do not hear from us, call us or WhatsApp us at the above number. Right? Okay, so I have gone through this. Thank you, Dr. T, for sharing
thank
this
you.
lobang. Yeah.
Thank you to Amy. I strongly encourage all of you, especially if you do not have an iFast account, to get it. There are at least two main advantages. Number one, this one the lowest. Hey, $8. What does it mean? It means you buy $1 million shares, you only pay $8, right? And number two, the whole team, this Stanley team, including Amy and many others. Okay, there are 10 plus of them working as a team. They are all trained by Dr. T. So it means you have a very knowledgeable team who are this brokerage, these teams actually supporting you. So even you already got other accounts, right? I suggest you to get one more. The reason is very simple, right? If you got 3 accounts, compare their services, compare their fees, then you'll realize, and compare their knowledge, especially when you need help, right? To take action on certain stocks. Although Dr. T would encourage you to take your own action, but sometimes you need a listener. So Stanley and the team will be the best brokers for you. So do consider just now that suggestion. Okay, and Dr. T would like to continue. While you actually sign up. To sign, very simple. Just take a photo of the QR code here. The worst case, Dr. T, I don't have mobile phone. I don't know how to create an online account. No need to worry. Take a photo here. At least got the Stanley and the team phone number. Later on, WhatsApp to them. Understand? They'll guide you step by step. So again, action is the most important. Don't just listen and do nothing. Of course, Dr. T, I'm willing to pay $100 to my friend. Then by all means, but I'll rather pay $8. Right? So in fact, this iFast is using fintech technology, right, to make money. Technically, they don't need to make money from stocks, right? They also provider for insurance, for bonds, and the rest. So that's why once you understand the iFast, this model, all right, in future you can also buy iFast stock, okay, but not within today's case studies. Okay, anyway, we move on from here, looking at our next topic here. Dr. T, assuming we have the iFast account, right? Dr. T, you say you want to teach her the defensive strategy. How can we move on from here? Fine. Okay, hope, wow, everyone still stay. Thank you so much. Wow, so I will use the next 1 hour to share the strategies, plus the 2 more case studies, Hong Kong Land and this Reit, and why they are defender, why they are cash cow, why they are undervalued, why under worst case, the next 2 years, right, the market may drop by half, assuming something you do not happening, why you are still okay, right? So this is called defensive, undervalue, and dividend stock. So just already cover using the 2 countries as a defender. But some say, Dr. T, this is too simple, too easy until I dare not take action. You see, like just now sharing with you, iFast, low commission, so simple until some cannot believe it. You also miss the opportunity. So now train you first. So your action as simple as a drop Stanley one this message, or use the Yongguan just now. I provide in the chat the link, right, for you to register. As simple as that. Just take 10 seconds. So that's why action is the most important. So Dr. T, my 涂料 right? Can you tell us what to do, what stock to buy, when to buy or when to sell, and so on? Okay, we continue. But again, remember today our team is look for defensive undervalue and dividend stock to fight against the 5 black swans or 5 potential black swans we mentioned just now. Huh? Okay, so how to do it? And again, you don't have to time the market, but if you can do the simple timing integration, especially applying optimism and technical analysis, that will help you to maximize your potential profit. Huh? Let's move on from here. This is a stock called Hongkong Land. Why Hongkong Land is so famous? A stock, I believe many of you have heard about it, but Hongkong Land actually, the main business is actually in Hong Kong. That's why called Hongkong Land, right? But it's actually a company with nearly 100 years of history. It belongs to another bigger company called Jardine Group. Jardine Group already existing for 200 years. Do you think a company with 100 to 200 years can go bankrupt overnight? It doesn't matter, assuming you go bankrupt. Current price to book ratio, you take all the asset value, mostly is a property, right, and use it, right, compare with the share prices. The share price is only 30% of the asset value, implying today, if Hongkong Land you buy, let's say near to $5, the company go bankrupt tomorrow, you'll be celebrating if it goes bankrupt. Dr. T, don't be this so-called funny lah. How come company go bankrupt? I will be happy because $100 company, this asset worth. If goes bankrupt, assuming the building they tear down, they just sell the land. Hong Kong land, they sell the land in Hong Kong. Technically, majority of the Hong Kong land is in Hong Kong. Some of them in the marina area in Singapore. Or these are called the Grade A commercial property. These are called the investment property. They collect the rental. So that's why it behaves like a Reit. That's why it can pay you around 4% dividend yield. Okay, depends on the share prices about a yield. And they have this development property in China side. They just invest $4 billion US, right, in the west bund of the Shanghai. Okay, and that could be the future growth engine between year 2003 to 2007. Assuming you put in $4 billion, you convert the land in China into Hong Kong land properties. And right now, with the loosening of the property regulations, right, do you think they can have a better sales? Or do you think Hong Kong land cannot sell anything in the Shanghai? Do you think Shanghai will become a dead city? You see, recently got COVID lockdown. Is it lockdown forever? Answer is not. This is a stock market, right? Voting machine in the short term, up, down, up, down. This is a stock market, right? In the long term, weighing machine. What's a weighing machine? You buy low, sell high. This one could be double your wealth. You buy low and hold long term. This can go up by 8 times in the last 20 years. 20 years, your 1,000 become 8,000. Your 100,000 become 800,000. But if you are buying using the wrong cycles, buy at the high optimism, sell at low optimism. From $9, it can fall down to $4. It can cut by half. So that's why during the pandemic time, when it fall down to here, Dr. T graduates start to get excited. To buy below $5, technically this is a low optimism. Even at now is a low optimism. But I have one student, many students take action, but there's one student could take action at 3.8. Right? During COVID-19 time, it dropped to around 3.5. This student can buy at 3.8. Right? But Dr. T, I'm still this envy of your student can take action here. But if I show you later on the next strategy, you don't need to time the market, right? But you must have the faith, right, of this 100 years old this company. Even it goes bankrupt, $100 asset, fire sales still can get back $50. And guess what? You only pay $30 share price. Okay, so if $30 you can get $50 under worst case, why you scared? You scared because the share price can be up and down. You can be one day drop by 1%, another day can go up by 2%. Understand? Okay, clear, Dr. T, perfectly clear. Now you treat yourself as if this is a so-called global financial crisis for the next 2 years. Assuming the next 2 years, it never go higher. It just goes sideways or go down, doesn't matter. Are you okay to collect 4%? Just how we are talking about STI 3 to 4%, Hang Seng around 2 to 3%. But if you can take a little bit more risk, right? Diversify from an ETF to an individual stock called Hong Kong Land, you can get extra dividend yield, and there's a potential this upside here. You buy low, no need to sell high. You buy low, just sell at a fair price here. Right? Do you know what is a fair price here? This is roughly agak-agak around $8 to $9. So it means from the current price to here, buy low and sell just a fair price. Huh? This is around 50% upside. Okay, so my graduate already gone in 2 years ago. They already get the 50% here. But whether to get another 50%, I'll let you decide. And after all this, it's just a fair value. Okay, saying is one thing. The moment you're going in, who knows? The next 1 week, it may fall down by 5%. Then your entire dividend yield will be, all right, so-called erased. So that's why buy this kind of stock, you must have certain risk tolerance level. After you buy, cannot every day go and monitor, analyze until not paralyzed, until you don't know what to do already. Yeah, you must understand this is called Hong Kong Land. You must understand it's a grade A commercial property. Right? Behind there's another bigger defender called Jardine Group. Who is Jardine Group? Jardine Matheson Holding, Jardine Strategic Holding, which is delisted already. Hong Kong Land, right? Jardine Second Carriage, Dairy Farm, now called DFI. All these are the part of the STI components. Your three major banks very powerful, but even DBS, the biggest, is around 10% of STI. Jardine Group combined together is 15%, 1/5 of STI. You see, Jardine itself is more powerful than DBS, right? But of course, you can look at individual Jardine stock, but which is not our strong focus here, right? Today, I share about Hong Kong Land, a few reasons. Number one, due to the defensiveness, the undervalue here. Price to book ratio, meaning under worst case, you go bankrupt, you'll never go bankrupt. But I cannot guarantee for you lah. This is still your hard money. Okay, probably one day nobody interested to buy Hong Kong the land. If Hong Kong land go bankrupt, the land also don't want to buy. Right? Why? Maybe there's a level 5 crisis come. Maybe Hong Kong go bankrupt. I cannot predict that day, but you have to see how likely it happen. Number two, optimism is low. This itself is already undervalued. Buy anything less than yellow line already undervalued, not to mention less than the green line. This is the unfair price. Unfair price only happen roughly every 10 years or so. It has been roughly 2 years. Don't know where any time it can go away. So again, same as a Hang Seng, right? You're given an opportunity, low optimism, but it may not go higher right away. It's like not like tomorrow you buy, the next day actually go higher. The one called luck lah, if it happens. Huh? Right, so that's a second form of undervalue through the optimism. This is a fundamental low, so-called undervalue. And more importantly, the technical also provide you defensiveness. Some of you, why you dare not buy low? Because you're afraid buy low, get lower. But guess what? Later I'll show you the technical of Hong Kong Land. Right. In fact, the technical is getting better. Right. I'm not saying you buy for sure you go higher, but the technical also helping you. Remember, Dr. T talked about LOFTP. The L, despite it's not a country, but it's 100 years company, right? With protected by the level 2 called the Jardine Group. The O protecting you. Optimism is low. The F is protecting you, fundamental. The T, the technical later will protect you soon. The only thing not protecting you is P, meaning, right? If you are a short-term trader, you buy up down, you could lose money, right? So, but the best thing right now, short-term trading and long-term investing is like converging, right? In the last few weeks or few months, we'll see that together in a short while, huh? Okay, so that's the proceed further. Don't go and envy other people, you know, my graduate who make 50% from here. You are given similar opportunity, except this student can buy even at low optimism. But later I'll show you, if you can apply one no-brainer strategy, even you no need to time the market. You can even get as low as here. I'll show you in a short while. Huh? Okay, Hong Kong Land for the technical part. right? If you zoom into roughly here, right, using technical analysis, right, what can you see from here? You can see the $5, right, is actually an important resistance or support, right? If it fall down, it becomes a support, right? If it below, it become a resistance. It just break above this $5 resistance a few days ago. Even today, drop a bit, right? It's still above $5. So it means that near to $5 is a good compromise between short-term trader and long-term investor. Because short-term trader, you want to use a breakout, stronger so-called trend. But let me show to you, this is already quite good, right? Comparable with just something like we talk about like Hang Seng, you see, right? So you can see higher low, right? Although this a higher high not yet happening, but if you are drawing some form of this kind of ascending triangle, like here, okay. If you go until here to break, I'm not saying cannot lah, but then some you say sayang, Dr. T, how come at $5 I can buy, I don't buy, then I have to wait like 5.7 or 5.8 to buy, huh? I'll let you decide, because some of you low, dare not buy. Then later on go a bit higher, also dare not buy. I'm okay to buy here, for you to buy here, but you dare not, ma? So that's why above $5 is a good compromise. But it can never all the time I supported above $5. Although right now there's a $500 million share buyback. Huh? They have a program right now, but the share buyback one day will end as well. Lah. But it will not end so soon. Lah. Right? But you just have to remember, if really the sky fall down, if let's say USA continue to fall down, even this $5 can fall down as well, even if go above that. But you must have a certain so-called decision, right? Knowing when is the right time for you to enter. If not, low cannot buy. A bit higher also cannot buy. Higher also cannot buy. Then you buy at the highest point. Okay. So therefore, right, fundamentally is protecting you. Optimism protect you. Technical to the certain extent protect you, although it's not a strong technical. Right. About $5 is just a starting. Right. But your PA, right, not yet, right, confirmed. Right, you probably are someone who like to adhere to the tips. You are getting so excited. Wow, Dr. T so good. I fast $8 trading only, trading fee. Later I want to buy what Hong Kong land pay only $8. Feel free to do so. But I don't want you to buy Hong Kong land or buy the 2800, the Hang Seng ETF, just because of Dr. T say that. Because what I say, your personality may not align to you. Even looks like align, but you have not tested that. You pretend you're a short-term trader, you pretend you're a long-term investor, but you're not. You just pretend only. You still need to actually test through it. Huh? The best way to test is actually look at your past record. Right? If you're a long-term investor, shake a bit, the market fall down by 10-20%. Are you scary? Oh, scary, you know, like hell, you know. Cannot sleep, Dr. T, every day praying, hoping, and then luckily just now see I fast invitation, quickly join webinar. In that case, long-term investor may not be a cup of tea, but you don't have to give up just because of one-time failure. Instead, you can integrate trading into investing to have the best of two worlds. So that's why I was saying, particularly for the case of Hong Kong land, even a better position than just now that this Hang Seng here. Hang Seng not yet above 22500, okay? But this Hong Kong land, right, just above the $5. Although this $5 can break below it anytime, okay? But at least this is a very so-called early, right, positive signal, so that you can have minimum technical aligned to the optimism and fundamental together. Plus, Dr. T talked about the 4 billion investment by Hong Kong land in the Shanghai, but all this return will come 4 years later. So it means 4 years later, you can collect every year roughly 4% dividend yield. Right? On top of that, if the business reporting better result every quarter or every half a year, that good news can it bring to a new high. Right? If you buy low, if you cannot wait to sell high, can you sell near to the fair price of nearly around $8 to $9? Right? But again, no one knows the future. Again, you're using your hard-earned money. You're not Warren Buffett, Charlie Munger can use investor money, because they are chairman of the Berkshire, they are chairman of Daily Journal. So that's why they can exercise their power using company, right, capital to do investing. But you have to use your hard-earned money, whether your CPF or whichever is your money. So that's why when money is involved, when personal feeling is involved, it becomes complicated, right? Low hanging fruit, no one there to pluck. Dr. T, later on the durian got owner how? If I pluck the durian, later not ripe how? Later on got one owner take the rifle gun want to shoot at me how? I dare not. I better let the durian fall down. Better fall down in front of my doorstep. Better, you know, no need to pay money one better. Like that, I cannot say lah. Got that kind of lobang, be careful. Probably that one is smelly durian. Later on you eat that durian, probably got stomach ache. We call it the junk durian. Got junk stock. Junk stock can sell you very cheap one. Right? $1 drop to 10 cent, drop to 1 cent. Very cheap. Some like to buy that kind of stock. Be careful. Fundamentally, a rotten durian. You buy cheap, become cheaper. You buy 1 cent per share, can drop to 0. Okay, say goodbye to Hong Kong land. Whether you take action, again, today is your call. This is your hard-earned money. So that's why you differentiate between abnormal versus normal investor. Normal investor follow the herd mentality. Everyone greedy, also greedy at the same time. Wow, can go in. Yo, analyst A say good, can go in already. Analyst B also good, say everyone can go in. Wow, economy good already. The 5 black swan normal already. Inflation fall down. One day, that day of course will come. You can wait until that day. Whether still got $5 durian, Mao Shan Wang wait for you. You see, or you fight with other people to buy the durian on the same day. You see whether can get a $5 per kg or not. You decide. Okay, in fact, buy stock is same as a buy so-called durian. Number one, we want to make sure, although we cannot see the inside of durian, but we can, you know, shake a bit, have a feel, see the color, see the smell. All this can given to you, right? This Hong Kong land will show you the result. They got at least 10 years of track record for you, right? So you can see, wow, every year this Mao Shan Wang, every gun come out, must be good one, good taste. And now it come out another round for you. Do you actually believe it will taste good this time? And the best thing is right now that Mao Shan Wang, last time selling you at $9 per kg. Right now selling you, pandemic at 3.5 per kg, although my student can buy at 3.8 per kg. Right now offering at $5. Lowest you cannot get. Now already go up 50%. Dr. T, sayang, I don't want to buy anymore. Later on, if more sayang, what to say? All depends on you. So that's why investing is not just based on one factor alone. It must be all combined together. Understand? It's never like a short term, a few days. You must see through it. Even under the worst case scenario, you must ask yourself, if I'm wrong meaning if Hong Kong land go bankrupt, if I'm wrong, assuming you will go up, but the next 2 years, not only 2 years, the next 10 years you fall down, what will happen? Will you be okay? The next 10 years, are you okay? Assuming you don't get 4% dividend yield, you cut by half, you get 2% for the next 10 years. Dr. T, like that, I'll treat that as a Singapore savings bond, no? Because Singapore savings bond for 10 years is also around like 2%, 3%. Can you create that illusion? Can you become abnormal at the right time or not? So that's why most people normal at the wrong time. Sometimes you have to learn how to be abnormal, especially when it comes to investing. In a normal life, we should be normal all the time. But investing, as Dr. T mentioned, is designed for the minority to make big money. If everyone can make this kind of big money, then analysts will become the so-called wealthiest person. If they become the wealthiest person, they will not become analysts anymore. Understand? Yeah. So that's why using this simple kind of logic. Okay. Now we continue from here. Okay. So move on, to the next so-called stock. Although Hong Kong land is good, although Hong Kong land can pay dividend, behaving almost like a REIT. Why? Because there are 2/3 of them is investment property. They collect rental, but 1/3 of them is so-called development property. They can buy and sell property in China side, right? But still, this is not a REIT because according to the law, as long as it's not a REIT, yes, so-called there's no obligation for the company to pay you dividend. Although this company have very good track record, you can actually study further. Hong Kong land in the 10+ years, never miss, even pandemic time still pay you dividend. Okay, why possible? Because it's like a landlord, ma. Pandemic, the tenants suffer, ma, not the so-called landlord suffer. Okay, we move on to the next one. Also landlord, but this landlord by law must pay you dividend. Why I say that? This is the largest REIT in Hong Kong, also the largest REIT in the entire whole Asia. Of course, if you know about Singapore, largest REIT is CICT, right? Also the second largest REIT in Asia, but Link REIT is even bigger than the CICT. Okay, and guess what? Right, as of yesterday, it dropped to 0% optimism. Wow, Dr. T sliver come out. Are you implying to me the optimism is one of the lowest so far? Yes, the last time is the subprime crisis also dropped to 0% optimism. Right now, the optimism even lower than during the this pandemic in the last 2 years. But the share price is not the lowest, huh? Right? So don't get me wrong. When I say optimism is the lowest, doesn't mean the share price is the lowest. Pandemic 2 years ago, the share price even go to around like a $50 plus, $58 like that, huh? From $99, you can drop to around like a 58, drop by 1/3. This is not a normal REIT. This is a REIT so defensive. In fact, it's a REIT which is a pain for the Hong Kong people. You know, Hong Kong people got the 3 mountains. Okay. In fact, of course, one of the mountain is called the MTR. One of the mountain could be their MPF or our CPF Singapore. The third mountain actually is the Link REIT. Why I say that? Not I say, you can Google for the 3 mountains in Hong Kong. Yeah, because Link REIT technically take all the shop houses, like those like HDB kind of shop houses, as if lah, right? But in the Hong Kong, and then commercialize it, repackage it as a REIT. And guess what? At one time, their rental reversion, meaning they can increase the rental year over year by this 10 to 20%. Yeah, although nowadays their rental increment is a slowdown. Okay, yeah, but they also start to actually extend, right? Yeah, this scope from Hong Kong even to China side. Right? But in the last 2-3 years, this correction is tremendous. From 99 all the way down to here. Right? Very seldom for this stock, drop to 0% optimism. Right? So there are 2 objectives now. A, you want to buy one of the lowest, could be near to now. Or B, you're afraid of catch the falling knife. You buy low, it may get lower, possible. So you want to wait further, also can. But you see, there are 3 opportunities. You buy low, can sell high. This is the mechanism number 1. You can buy low and hold, can go up by 6 times in the last 14 years. Okay, you buy low, sell, hold until now. All right, around 6 times the share price capital appreciation. Or you can buy and hold. Right, in the past you will never get 4.8%. Right now it's one of the highest dividend yield because optimism when it's the lowest, dividend yield will be the highest. In the past you can get roughly 3% dividend yield for Link REIT, already very good already. But right now it's near to 5%, very very rare, one of the highest. Okay, so if you can get 4.8%, assuming right you cannot get 4.8, assuming it may drop to around 3 to 4%, the next 10 years, right? 4% times 10 years, can you get 40% return? Right. The only catch is, will the next 10 years drop by 40%? This is a company as if you're HDB, but equivalent to that in the Hong Kong. Plus they include this car park. Do you know the car park? One car park in Hong Kong, they can sell at $1 million per car park. You still don't know, right? I'm not too sure whether it's the Hong Kong dollar or the US dollar, huh? But I heard about it, huh? Yeah, so they take the car park, collect rental from car park. Right, but that one is a small so-called business. Majority is those neighborhood, shop houses, right? So those are so defensive and they can increase the rental 10+% every year. Last time even more tokong. Last time 20% increase. You cannot say no. Say no, they pass to the next person already. You don't want to rent? Okay, fine. I'll pass to the next person. Okay, whoever wish to pay higher rental, they'll get it. Until the last 2 years is probably their lowest optimism, lowest so-called slower growth. Because this is a growth REIT, not just a normal REIT. There are different types of REIT. got dividend rate, got the growth rate, got cyclic rate. But this is a growth rate. But this growth rate right now also behaving like a cyclic rate. Yeah, so that's why this is a rare opportunity. But it's not for everyone. It's for someone can see through the defensiveness. Price to book ratio is 0.8. Although this is not the main strategy. Reit usually we don't look at price to book ratio. But even the worst case, those are shop houses. Let's say Hong Kong go bankrupt. No one want to live in Hong Kong anymore. The worst case, the China take back, you still can get back, your money through selling of the so-called shop houses by link rate. Okay, but are you okay? Even you don't buy Hang Seng Index, collecting 2 to 3% dividend yield. If you can take more risk, you can double the dividend yield to 4.8% based on the current price. Okay, and no one can guarantee you buy low can go higher. Are you okay? For example, this stock, right? This is near to the 60 plus, right? Can you type in the chat? Do you think this stock, if you are given 3 years, do you think how likely will it go higher or lower? No, right or wrong? Do type in the chat. If you are given 3 years, assuming typical global financial crisis lasts for 2 years, I purposely add 1 more year. Right? We got Kevin Boy say higher. Okay. All right. So we got the others probably unsure. I think all of you so far saying, well, then we got Mr. Tam say definitely. Yeah. Well, you even use the word definitely. Mr. Tam, don't tell me, you got a link read. Because some of you need the reconfirmation by Dr. T, especially those who got link read. Then if you use a word called definitely, because you got conflict interest, understand? Yeah, so but it's okay. Whether you got link read or don't have. Today, the key difference of link read versus the Hong Kong land this way. Hong Kong land is 4% is not guaranteed. But based on the business model, very likely to pay to you. But the link read, this is also not guaranteed, but they promise by law 90% of rental will return back to you. Right? And this is based on their defensive business. Defensiveness, true. There are shop houses, like a neighborhood shop houses. Defensiveness, true. Right now, the optimism at 0%. I'm not saying 0% cannot drop down. They can go to negative optimism. Defensiveness, true. Right now, the share price drop at the technical near to $60 support. If you draw like a support line here, right, resistance becomes support. You see $60 is a very strong support. Currently is actually around $63. Today go up a little bit, Yeah, so you have two possibilities. A, anything above $60 you can buy. Dr. T close one eye, just buy, right? Probably break into 10 trenches or 5 trenches. Right? Trigger the first bullet. If drop down further, average down. This is called one method. Another method is average up, going in first. Then when you go higher, for example, 60, 65, 70. Right, this is called the technical approach. It's not wrong. Whether you follow fundamental or technical approach, average up or average down, both are okay. But you must do something. Usually average down is not recommended, especially for growth stock. But we are talking about the 4 stock today, all can give you dividend. SCI, up to 3% dividend yield. Hang Seng, right, up to 4%, sorry. This is up to 3%. Right, link rate, even nearly 5%. Hong Kong land, around 4%. Okay, and under worst case scenario, for example, you don't buy just one, you buy 10 stock, one SCI ETF, one Hang Seng ETF, one link rate, one Hong Kong land. Got 6 more. Later on, Dr. T say got Mao Shan want to fall down. Go and attend Dr. T another free webinar, which is a longer version one. Then the complete 10 strategies, one strategy, one stock. And the worst case, let's say if all the analysts right now who look down on the market, what if they're correct? The market fall down. Apply defensive undervalue dividend plus Dr. T, the most powerful strategy right here, called Kiasu versus Kiasi. Okay, what to do? Okay, so any comments so far? So this is what is your possible percentage? Can you type in the chat box? Are you Kiasu? Meaning you're afraid, like especially you want to do bottom fishing, afraid the market will run away. Or are you a Kiasi, buy low, get lower? No right or wrong. Can you type in the chat? Okay, so we got Bernard said, Dr. T, now I become Kiasi. Kind of like before that, probably a Kiasu lah. Kiasu then become Kiasi. Okay, he said last year Kiasu lah. Okay, then Jenny said both also can. Okay, then the Kenneth say he's a Kiasi, then the Thomas say Kiasu. Fine. Kiasu or Kiasi, in fact, this is two different unique percentages. Kiasu one, they are quite brave, but they are brave in the wrong way sometimes. So that's why if you are Kiasu one, today quite suitable for you because you can use the defensive undervalue dividend stock for you. You can apply the next one called the average down strategy. But the Kiasi one, then you better have minimum integration with technical like just now, Hong Kong land above $5, right? To make sure even your average up is okay. For example, you can buy Hong Kong land at even 5.7, also okay. Just don't do nothing. Don't let it fall down, do nothing. Let it go up 10 to 20%, also do nothing. At the end of Kiasu or Kiasi, do know Kia what already, right, at the top. Probably buy at the highest optimism. Huh? Okay, let Dr. T show to you this very powerful technique. Well, all of you must thank you to IFAST team today. Huh? If not, they invite Dr. T, you cannot learn all this for free. But guess what? This is just Dr. T, 1% of my brain only. Right, this is probably just one of my strategy. You want to learn the complete 10 strategies? Wait for the Mao Shan Wang another 10 minutes from now. Huh? Okay, let me show to you this method. This method say that whenever your stock drop below this low optimism, for example, this is a 25% optimism line. Who know this one could be, let's say, OCBC Bank, let's say $8 or $10. This one could be, let's say, Public Bank, let's say 4 ringgit, 5 ringgit. This could be, let's say, the Brent crude oil or the WTI, $20 per barrel. This could be Hong Kong land, $5. This line, understand? I just take for example, assuming that is a low optimism prices. This is like green line of Dr. T optimism line earlier. This is a green line. What is entering the green line? You can start the average down process. Okay, the Kiasu one can start going in here, but the Kiasi one you wait. Kiasi one you integrate the optimism and technical. You're entering this phase. The Kiasu one entering this phase. Growth stock, especially you want to buy like Meta, Facebook, ATM machine, Alibaba, Tencent, Meituan. Ideally, follow here. Understand? Right. But for stock like Reit, Hong Kong land, SCI ETF, especially the Hong Kong Hang Seng ETF, possible to here or integration of both, meaning could be here plus here. Understand? How to do it? You must trigger your first bullet once you see Dr. T optimism come, meaning it start to fall down. Although you don't know how low it can go, it can fall down by another 10 to 20% to the lowest optimism, for example. It doesn't matter. You don't need to know the lowest point because no one able to buy the lowest point. Once there's a low enough, you can start to trigger a first bullet called A. Okay, A, after you enter, for example, you break to 5 tranches. You got $5,000, right? 1,000, 1,000, 1,000, 1,000. When it's current 25% optimism, you enter 1,000. One is fall down by 25%, meaning 0.75, you enter another 1,000. Drop by another 0.25, meaning 50% of it. So every 25% of the share price at the so-called low optimism here, this line, for example, $20 to 15 to 10 to 5, understand? And the worst case, assuming you almost go bankrupt, assuming that almost impossible happening. You thought this never happening. I'll show you there's one example happening and you'll see okay. Let's say near to the 5% of the low, this low optimism already very low already. Assuming a 5% of the $20, let's say $1. Right, 5% of the A, right, you can entering your last so-called bullet. And then you average the 1,000, 1,000, or 1,000, understand? You take all of them, your averaging is around 0.51, right? So this averaging called 51%, right? Let's say your stock A, $20, 15, 10, 5, follow this percentage. The last one is $1. Assuming it fall down to $10 and then never fall down further, you only have 3 chances to buy. Assuming you only buy average down, you don't average up. Right, it's okay. You take 20, 15, and 10, add up, divide by 3. So your averaging is around $15. Is it clear, everyone? Right, this is called linear method to average. Another method is called half method. Or this is even more so-called Kiasi one. This person very Kiasi. Every time half when it go in, $8 half to 4 going in, $4 half to 2, $2 half to 1, 1 half to 0.5. It's like your STI, 3,000 half to 1,005, 1,005 half to 750, something like that, right? Almost impossible happening when your hard-earned money very hard to convince you to use your money. Okay, I was saying whether you use the normal averaging method or use the so-called Kiasi of the Kiasi method, using half method also can. Okay, yeah. So you know some of the stock, you know, Alibaba, for example, 300 dropped to 150, 150 at one time almost dropped to $75. Yeah, so you can also apply this kind of technique, if you want to. All right, so let's use this kind of strategy. Right. While you are at the low optimism, ideally you have some dividend, meaning while falling down, you probably suffer capital loss, but at the same time you collect minimum. You got passive income. You tell your wife, husband, it's okay, we never make a loss. Right? We are now, my stock become a bond. I just collect 3%, 4%. I get the link rate 4.8%. I get the Hong Kong land 4%. The return. I give you this a shopping voucher. Every $100 can print so-called $4 or $5 for you. Go and spend the money. Okay. Yeah. So that's why if the market for the next 2 years go to winter time, right? You just treat the stock as if a bond. You treat your stock as if a fixed deposit. You put money in a real bank, you just get a 2% return. You put money in another bank called the Singapore Savings Bond, give to our Akong. Our Singapore Akong will give you 2% every year. But you give to another fixed deposit, you take a bit more calculated risk, whether through the ETF or through the so-called individual giant stock, or should I say individual dividend undervalue defensive giant stock. Must have these 3 keywords: defensive in business, defensive in terms of the so-called share prices, right? Undervalue in fundamental, undervalue in terms of optimism, and then moderate high dividend yield. At least this dividend return must be much more than your Singapore savings bond. Okay, and even the worst case, if the company may go bankrupt, right? There's a high possibility you no need to go bankrupt. If something so good may happen, Dr. T, if that happening, meaning the sky dropped down the gold bar already, but guess what? Some would not let the gold bar, right? Some would actually will not grab the gold bar. They will let the gold bar drop to the floor. Why I say that? Jerry mentioned, I fast want the lowest commission. At one time, you for sure need to actually do trading. Why just not give the link to you? You don't. A few of you did not actually register, right? So don't forget it, no? Yongguan, right? Before Dr. T finalizing, give them one more chance. Okay, give them a link to register. Okay, so that later on Dr. T will not nag on them anymore, huh? Okay, Dr. T, can you show us a real example applying this Kiasu or Kiasi strategy? Fine. Look at here. So this is a Brent crude oil, not Brent, WTI crude oil, $20 per barrel. 2 years ago, if you so-called join Dr. T, the blog, EIN55.com, not only you can download 2 free ebooks, there are roughly 1,000 articles waiting for you. There are at least a few articles I wrote about the crude oil at the time. Right? Assuming at $20 per barrel, you buy. You can buy, for example, through the XLE energy ETF, or you can buy through the USO, also can. Huh? All this you can, once you connect to the iFast team, they become your free consultant already. Assuming you got the 1,000, you've entered the first 1,000. And then you drop further, Dr. T. That time the crude oil pandemic, or you no one there to I think no one want to use the oil anymore. Crude oil dropped to $15 per barrel, dropped to $10 per barrel, dropped to $5 per barrel. All went through. The last one, we aim at $1, but you cannot get it. Why? Because within one night it dropped to $-. So this one you cannot buy at $1 because you could not buy a $-. Technically, no one can sell you at negative. So if you apply this no-brainer way, even oil go to so-called bankrupt, but actually went bankrupt only for one night. Under the worst case scenario, even a commodity can go to negative. Let's look back, apply Dr. T this method. I wrote this one 2 years ago, before the oil actually fall down. So 20 plus 15 plus 10 plus 5. By right, you can get this one, but in the real world, you cannot get negative dollars. So we skip this one. So your averaging of this 4 and 3 is a 12.5. Look back right now. What is your WTI? Your WTI and Brent is around near to $100 already. So using this simple method, although oil cannot give you dividend, but it can give you $20 to the $100 that the multiple times of capital gains, right? So can you make money? Answer is yes. Now we move on to the next example called public bank. Also talk about public bank 2 years ago, right? At 4 ringgit, that time before the 1 to 5 bonus share, that time is called 20 ringgit, no? But now I adjusted to the current price. Equivalent to that, around 4 to 5 ringgit. 4 to 5 ringgit is around low optimism. Assuming you trigger the first bullet, right, drop to 3 ringgit, 1 bullet, 1,000, right, 2 ringgit and 1,000, right. But of course, it did not drop to 2 ringgit, no? Right. So it actually dropped to roughly 2.5, right, 2 years ago. But assuming you can actually take action, huh? Right. I even assigned as a homework to my one student at the 2.8 ringgit. Okay, 2.8 ringgit assigned as a homework, but that one is one so-called bullet lah. But you even no need to wait for Dr. T assigns the homework. 4 ringgit you buy, 3 ringgit you buy. Even the worst case, if one day it may drop to 2 ringgit you buy. 2, 3, 4 add up together. What's the average? $3. You can use 3 entries, or you can be Dr. T graduate, follow Dr. T homework to enter at 2.8 also can. Nothing wrong. But you can see at the end, the key difference is action taking. Now you look back, right? Public bank is already right over 4 ringgit already. Guess what? Do not even a 4 ringgit plus is still at the lower optimism. Similar as a so-called Hong Kong land case. Okay. Now we move on to the current example. The same strategy. The only change is now we change to Hang Seng, Hong Kong land, Ling Reit. Right? They all entering a low optimism. Hang Seng at $24,000 already low optimism. As of today, is around 21,000 plus, right? And then Hong Kong land at $5 definitely is low optimism. Ling Reit, right? Even $70, $80 is already low optimism. And as of today, it's actually 0% optimism, right? It means these are the 3 stocks except STI lah. STI is only 40% optimism, not low optimism, but moderate low, right? So I'm okay for you to ignore STI ETF if you're hungry to buy low, but you're also fearful of catch the falling knife. But luckily, these are 3 stocks. Number 1, they're undervalued in terms of business. They are defensive in terms of business. Number 3, especially index, they are diversified to 66 stocks here. Number 4, they paid you dividend. Under worst case, got 2-3 years winter time. As long as you don't check the share price every day to scare yourself, you pretend it's a bond, right? Likely you'll get that 3%, 4%, or even 5% dividend yield. Even 3, 4, 5 cut by half, assuming the Great Depression come. Right? Let's see what happened. Okay, we let it drop by 25%, 0.75, 0.5, 0.25, and the 5%. Right? Assuming so far Hang Seng gone through this in the last 1 year. Hang Seng even dropped to 18,000 points before. So you're averaging only 2 and 3. If you apply my method in the last 1-2 years. Hong Kong land, you can also apply that. Hong Kong land, I think the lowest is 3.5 during the so-called COVID crisis, right? But I have one graduate can enter at 3.8. Right? Even you can not enter at 3.8 when I assign the homework to you. You can $5 enter, $4 enter, $3 enter. If you fall down $2, $1, if one day drop to 25 cents, you can do that. Right? But the question is, will you be, when there's a Great Depression, will you be depressed as well? Do you think Hong Kong land can drop to 25 cents from $5? I cannot say no. Right? You must answer to yourself. Do you think Hong Kong land can become like another noble group? Do you think Hong Kong land will become another high flux? High flux is water in industry. No so-called high quality asset. Okay, noble group technically is commodity. No high quality property. Hong Kong land is land, property. Okay, and got Jardine so-called defenders supporting with 100 to 200 year history. Ling Reit, the largest in the Hong Kong, the largest in the Asia. as if your HDB in the Hong Kong commercialize it. Right, $60 is already here. You are now averaging from $80. You're now averaging from 60 plus, 63. Right, assuming 63, one bullet. 50, one bullet. 40. This averaging, assuming the next 2 years go to Great Depression. Right, 100 years only happen one time. As long as Hong Kong, the entire island, never go bankrupt, you average 80, 60, 40, 20. The average is $50. You let it go run round, go down, and go up again. Right? Of course, you can average down and average up. Kiasu plus Kiasi. So I let you decide. You can follow one phase alone, or you can follow the two phases. And whoever want to do the bottom fishing for the tech stock, which are non-dividend, you can also apply that, but you need to integrate, Dr. T, the growth strategy. I'll teach you that growth strategy probably in the next webinar. Fine, everyone, so far so good. Okay, let me do the so-called grand finale summary before I open up for Q&A in a short while. Right, so Dr. T, thank you so much today for sharing you. I cannot believe it. Within this 2 hours webinar, I've learned so much. Right, whether Kiasu and potentially Kiasi, both can actually make money. Right, but do you know there are at least 10 different these strategies I can teach you further, because today I only have 1-2 hours. That's why I can really teach you one strategy, right? The defensive undervalue plus dividend, huh? But to know exact what the dividend stock to buy, undervalue and so on, you need to go through these 10 strategies, plus short-term trading and so on, huh? And are you worrying about the 5 black swan just I mentioned earlier on? Right? How to truly buy low, sell high? Even I'll teach you the Temasek, reverse the Temasek strategy, decashing Warren Buffett, how to outperform all these big funds or big boys. And then what are the high probability shorting or to long, more on trading side. Okay, generate passive income, right? Not necessary REITs, could be pure dividend stock. How to do spring cleaning, what to buy, when to sell. LOFTP, right? Like just as Dr. D mentioned, but extend from Singapore to US, to Malaysia, China, and Hong Kong. Okay, Dr. T, I don't have so much money, but can you, charge us a lower fee for this so-called special webinar? I believe it today. I already learned so much. Your next webinar with 10 strategy, definitely I need to pay to you lah, because paise lah, must pay something, huh? Okay, it's fine because today you are invited by iFast, Stanley team. So this is a joint webinar with Stanley. So I promised to him, you'll be FOC for you. Right, you'll learn this 10 strategy mentioned all over here. But what you need to do is actually to register. Right, EIN55.com. You can use the next 1 minute to register. At the same time, you can download Dr. T free 2 ebooks from the same website. This is my market outlook for this year, plus the 10 dream team stocks. Okay, these are 2 different ebooks, all FOC for you if you register today, huh? And during the next webinar, I'll actually provide you a free global stock screener. I will teach you that strategy, how to do so. And for early birds, try to join earlier because I'll start from 1 p.m. Even I'll usually 15 minutes earlier, like 12:45, I already start the Zoom. 12:45, you can join earlier. Then the first few, I'll let you name one stock with a choice. Then we can do the stock diagnosis. Right. But at the same time, Dr. T would like to open up for Q&A. So feel free to type in the chat box. I'll answer to that. Huh? Okay. And again, if you listen to now, like a few months later, even you miss the 30th of July, which is the next webinar, I have a free this money free webinar. So you just use the same website to go in. Your next webinar could be in August or could be September, doesn't matter. But try to join the next available one to you. Is that okay, everyone? Okay, right. In that case, thank you so much for your attention. Okay, and hopefully, you can apply one of the 10 strategies. Today, you learn one first. In the next one, you learn the 10 strategies and apply that, whether into your investing or trading. I believe that will make a difference. Okay, thank you.
Thank you, Dr. T. Wow, we've really learned quite a number of things, especially during crisis investing. I think there is 2 questions. For the purpose of this, we'll limit it to these two questions. We have a question from Kelvin. Is Reit a giant stock? Dr. T, please.
All right. Okay. By the way, let me reiterate just now the disclaimer. All the sharing are for educational purpose. The reason is this: your hard money. All right. I say it's a giant, but what if you don't know whether it's a giant or not? Right? You cannot just blindly follow me. Right? Reit, although it's the largest REIT in the Asia, but largest not necessarily biggest. Look at HSBC Bank, the largest bank in the Hong Kong, but it's not a giant bank, not fulfilling Dr. T criteria. But Reit is a giant. But Kelvin, right? Why not learn from Dr. T the next bonus webinar? This is 4 to 5 hours. Sometimes I even extend to 6 hours. Right? But I don't charge you 1 single cent. Huh? Go ahead and learn from here. But in order for you can sleep tonight, in order for you not to miss it, because I know probably you have already taken action to open iFast account already, right? Because you worry that you may miss it. Because Dr. T, you say the support $60, you say that $63 already 0% optimism, right? If I think by my 2 liao, if 222 later on, wait, later it go up, then I probably will regret. Yeah, so that's why now you ask minimum whether Reit is a giant. But Kevin, what to buy doesn't mean now to buy, because a giant also can fall down. Even you look at Alibaba also a giant, but $300 can fall down all the way to nearly $70 to $80. So don't underestimate, right, the downside, even is a giant. But the difference with a giant fall down versus a junk stock fall down. A junk stock fall down may not come back again. The next crisis likely will be the final crisis. You'll never see that stock again in future. But the Reit, right, with so defensive business, right, as if right now you're having, many hundreds of shop houses, as if HDB in the Singapore right now in Hong Kong. Then the land is limited in Hong Kong. They go and build a car park. Then they rent out the car park to collect rental. Do you think that kind of business is defensive? You ask for yourself. And not to mention, Reit is one of the pain for Hong Kong people. It's one of the 3 mountains, because they have to keep on pay for that. Okay, so Hong Kong people also need to pay. So once you understand it, if you are in the same boat as the Reit, right, you're probably happier instead of feel miserable. However, if you buy at the wrong time, it can also fall down. At a certain point, as Dr. T mentioned, you cannot buy, at the lowest point. So you still need to take calculator risk. Right now at $63, although it's about $60 support, but there's a possibility it can fall down below that. But for that kind of risk, you cannot take. You probably need to consider other stronger technical stock, meaning use technical to protect your fundamental as well. Don't just use your pure fundamental alone. Okay, I also see that in the Q&A, just as Sandy mentioned a few questions. For example, similar question, but using another stock by WL asking, is Jardine Cycle and Carriage a giant? Can hold for long term? Wow, got 2 questions in one. Jardine is a cousin of the Hong Kong land. Although business not related, but both are under Jardine Group. So do you think if Jardine Cycle and Carriage going to go bankrupt, do you think the Keswick family who control Jardine Group for 200 years will let Jardine Cycle and Carriage go bankrupt? And but there's a difference. Jardine Cycle and Carriage is more cyclical in nature. Hong Kong land actually also cyclical, to be fair, but it's at the low optimism. Jardine Cycle and Carriage, I remember when I assigned a homework to my student was a few months ago. That time was around $24, $24 to $25. At one time it shoot up to $30. Recently, I think it come down a bit. Yeah, you can wait for that. Yeah, if you want to, or you can use the recent correction as an entry point for Jardine Cycle and Carriage. But again, WL, you need to know exactly what to do. If you're unsure, go and attend Dr. T next webinar. I got the 9 more strategy will teach to you. So in that case, try to join earlier at 1 p.m. So you can name that the so-called Jardine Cycle Carriage at that time. Then I can use that as a formal case study, because right now I only have 5 minutes left before 10 p.m. Huh? Okay, and your second question, is it for long-term investing? Long-term investing, there's a catch. A giant definitely suitable for long-term investing, but if a cyclical giant, I may not recommend for that. Yeah, so that's why, for example, like STI ETF, I would probably say okay to buy a current 40% optimism, but it's not the most ideal stock for that purpose. The main strength of a STI ETF is more like defensiveness, the 30 STI, the 3 major banks supporting it. Otherwise, there are actually much better opportunity than STI ETF. For example, Hang Seng ETF much better than STI ETF, even as of now, right? So, but if you ask me whether it's do a long-term investing, I probably say yes or no. Yes, if you are okay, one day if Jardine circuit carriage can double itself and the but one day it may fall down by 30-50%. Are you okay for that? If you are not okay, then don't buy Jardine second carriage, because this is a stock related to this automotive industry. Although right now it's doing very well, because Jardine right now second carriage, over 80% of the recent revenue contributed by the Indonesia subsidiary called Astra. Astra is doing very well. So Indonesia is one of few country booming right now. It's a producing commodity which is doing very well. Singapore, Indonesia, these are the few exchanges this year still got positive return, while the rest of the world, actually correcting by 10 to 20 to 30%, depends on the exchanges. So that's why I'll say Jardine second carriage. Unless your risk tolerance level is high, I'm okay for you to buy low and hold long term. Otherwise, there are other better stock for buy low and hold long term, meaning you buy, can do lifetime investing, no need to sell at all. Okay, again, this will be included in one of my 10 strategies for lifetime investing, which is not using Jardine second carriage. Okay, wait for that. No? Okay, another one, not so related one, but still can broadly categorize under the so-called investing. We got Bernard asking, right now the bank loan, the mortgage rate, going very high. Should I, use better to use a CPF, to pay for the HDB or to use a bank loan? No right or wrong answer. Another related question could be, whether you want to borrow money from HDB or borrow money from the bank. Okay, so, in the past, okay, this CPF loan, of course, is more steady. Banks would cyclic the interest rate. Yeah, so right now, the commercial banks, of course, the interest rate going higher. So some actually want to turn to actually borrow money from HDB to do the refinancing. Some want to lock in this so-called lower interest rate. But no matter how you do it, one day you still, I need to face the interest rate at one time will still come to the high point. So, but one thing for sure is the interest rate will not be locked, forever. Yeah, so of course the HDB one have more stability. I was saying you cannot enjoy the best of two worlds. If you benefit from one party, one day the pro will become cons. Yeah, because property borrowing money is talking about probably 10, 20, or even 30 years. Right? Every 10 years is a cycle. We call interest rate cycle. Sometimes interest rate, for example, in USA can drop to nearly to zero. And this round likely will go up to even 3 to 4%. How high? It depends on how fast the higher inflation can be actually under control. So the next 3 to 6 months will be quite critical. So in my next this extended version, the 4 to 5 hours webinar, I'll share further on that, the 5 black swans with more details, with more other sectors of stock, because this round we are only talking about defensive stock. For example, Bernard, instead of buying property, why not you consider buy property stock? For example, just now we got 2 related to property, Reit and this so-called Hongkong land. Although they may not be the best, as Dr. T mentioned, they are actually 2,000 giant stock in the whole world. Yeah, so that's why you can actually looking for a better stock, so there's no ending to it. You can buy one best healthcare stock, one good oil and gas stock, one good property stock, one good even Singapore REIT. No need to look at Hong Kong REIT. If you think Link REIT can go bankrupt, and one good bank, okay, may not be DBS. There could be other better bank globally. So form that 10 dream team portfolio. not all for the Kiasi one. Kiasi one applying the dividend strategy can average down. So it's optional whether you want to do average down. You can do average up if you want to. Okay, so there's the nothing wrong for that, huh? Okay, so let me probably answer the last question. I thought just now there's one question asked by someone. If I can find that question, huh? Okay, so we have somehow I missed the question. If I can find, huh? Okay, all right. So I think one of you say, I think it's Gerard say, you heard 2833 may be delisted. I'm not too sure. Can you consult the IFAST team? Okay, because just I mentioned the Hang Seng got 2800 versus 2833. Huh? I cannot confirm that. Okay, so can you talk to the consultant? IFAST is an expert in the so-called ETF. So once you open one account, right? So the entire team, right, become your free consultant. But I would like to urge you one more time. I'm calling for number 5 times. Don't so-called leave your decision making to other people. Although the team can be trusted, but their personalities may not be the same as you. Right? Can you learn at least from my next Dr. T next webinar? Okay, learn how to make decision. But you quickly to like today got offer, right? Get this account first, and it doesn't mean you open the IFAST account. Everyone got the $8 one. Huh? This $8 is specially provided by this Stanley IFAST team. Huh? So need to be clear to you. Huh? And then you come back another day, may or may not have. Huh? Right? But just in case you listen to this probably a few days later or a few months later, right? Whether got this lobang or not, right? Just now